Welcome everybody to this really cool episode of Inspire TV. Inspire TV is the small business education channel that is powered by Inspired Chartered Accountants. And if you've never met us before, we're the guys who help young families use their small business to achieve big goals. Now, that's a cause that's very dear to our hearts because you may have known the statistics when it comes to failure in both business and family. The experts say, you can see my inverted commas here, the experts say that in business, 3 in 4 businesses fail. And in marriage, the core of the family unit, 1 in 2 of those families end up breaking up in divorce. And that's a problem that we're not very happy with and why Inspire exists. When we go to bed at night, we dream of a world and our vision for the world is one where families have the freedom to absolutely have the freedom of choice about what they do with their time, to have the freedom to put family first, and to be able to create a beautiful business and family that they're absolutely proud of. And so our Inspire TV channel, which you guys have taken the effort to sit in on and attend today, is our means to educate the young family and small business community of Brisbane on all the different strategies and ways we can help you build that business that gives you the freedom to put family first. So that's our introduction to today's topic and, today's episode of Inspire TV. The very specific topic we have is about paying too much tax. And the first guide is, first of all, how do you know if you are perhaps paying too much tax? Because we all in business may have that feeling or that inkling. And the most important step involved in that next is what the hell to do about it. And sorry about my little curse there, but when we were doing preparation for this webinar, I actually got a little bit pissed off because Ben shared with me some stories about new clients that had come on board with Inspire and how we're able to save them tax. And it was huge. It was absolutely massive in the thousands and thousands of dollars. And we're going to share some of those war stories with you soon. But it just annoyed me that that was the service that other businesses were experiencing. So I'm glad that Inspire is here to help. Just on that, Ben Walker, can I get a hello from you? And I'll introduce you as our guest speaker today.
G'day, Harvey, and thanks everyone for joining us this morning.
Hey, there you are. Webcam's on. Looking good, bro. Very cool. So if you go to the next slide, Ben, probably give some insight into who you and I are. Ben and I are the young guys behind a really cool practice called Inspire here in Newstead. And as we mentioned, we solely exist to help young families use their small business to achieve big goals. And we really, truly believe in the power of education to do this. So for those of you who don't know you, Ben, just quick 30-second on what your background is and why you've got the basis to be able to talk on this subject of helping people save tax today.
Yeah, so starting out at Big Four accounting with one of the bigger firms in KPMG, then shifting to a small practice in the suburbs, I saw what impact we could have by just thinking critically about tax planning and structures and that sort of thing, and the massive impact we can have. Over the years, I don't know the exact number, but I'd say it would clock up into the hundreds of thousands of dollars of tax, possibly even millions, that we've been able to save our clients.
Yeah, awesome. And I'm keen to look into a few of those war stories right now, Ben. So let's switch over to that page. And before we go into some of the stories and scenarios, like what were the situations as to how we were able to save this tax, the thing I want to reinforce for you is you're going to learn a little bit today about what accountants do currently for their clients and what they should be doing as well. And from Inspire's perspective, we are not your average accountants. We don't just exist to do tax returns. And the story I tell so you can understand this easily is that, imagine yourself as a business owner driving on the highway and you're in your vehicle. So as the owner of your business or that vehicle, you're in the driver's seat. Now, for us to be able to do tax returns and financials, these are all like looking in the rear vision mirror while you're driving down the highway. Now, if you were only to focus on this historic perspective, how far would you get? You probably wouldn't get that far. And so that's what makes Inspire different. We have that perspective about what's gone on in the past, and today is about how to maximize the amount of your hard-earned cash that you keep. But the bigger picture about Inspire is looking through the front windscreen. For us to act as your co-pilot, for say Ben to be sitting there in the passenger's seat next to you and say, okay, Sharon, here's the direction that we want to be taking you in based on the goal that you told us that you have for both your family and your business. So here's the fastest route, and here's some feedback as to how to get there on time. And so with that in mind, Ben, let's get into some of the historic side of things in terms of tax savings. You told me some of the stories the other day when we were saving thousands and thousands for clients. What were these war stories, and why have we got this guy with the painted face on screen?
I think that was my request, Harvey. White men running around in dresses. Thanks to Mel Gibson. But yeah, unfortunately, there's a lot of bad advice, or not really proactive advice in the accounting industry. And what we usually see when people are looking for a change of accountant is they're looking for someone to look at what they've got, give them suggestions as to what they could do better, where they can save tax. And I think it's pretty much an Australian pastime, paying the least amount of tax as possible. Now we want to do that legally, of course. We don't want to break any laws or end up in jail. But there's definitely opportunity out there to implement some of these strategies we're going to talk about today, which do end up saving many of our clients tens of thousands, if not hundreds of thousands, over the years.
Yeah,
so it's a really
So
piece.
Just on that, you were telling me some stories the other day. Maybe we can start off with your uncle. Like, what was going on before he had come to you and Inspire, and what were you able to do for him, and with what financial result?
Yeah, so I was actually just having a chat to him this morning, and he came to me a couple of years ago, and just wanted a second opinion on of what his accountant was doing. I just changed accounting firms and was quite getting active into looking at different family groups, and just with a simple review of his prior year tax situation, if we were looking after it, we could have saved about $15,000. Now, I was having a chat with him this morning, and he was sharing that story with another person, and he said to me this morning that the year he did come on board, we saved him $57,000 in tax, like just tax alone.
Yeah.
And that was just tweaking a few key things that the previous accountant wasn't on top of, with that massive result.
Yeah, understood. And is it possible to explain what those few key things were?
Yep, that was using trust distributions and trusts correctly, implementing things like a corporate beneficiary and making sure that the structure was right, and also doing some tax planning. So what that looks like is before the financial year ends, we tweaked a few things to save a couple of grand here and there. So all of that added up equaled $57,000, and he still remembers that, and I think that was about 3 or 4 years ago.
Awesome.
It was unfortunate because his accountant at the time was a pretty good friend, and it's unfortunate if a friend lets you down like that. That's a big amount.
Yeah, understood. And many people who are registered for today's webinar were introduced to this guy whose name was Jeff, and Jeff was another recent famous story. How much were we able to save, Jeff, and what was going on, without getting too detailed in that regard?
Yeah, it's definitely one of the ones I'll touch on in a bit more detail later. But basically, Jeff started a business a few years ago, and his accountant had just pretty much set him up as a company and told him to pay himself a wage. What happened though is he just kept on paying himself a wage, and when we had a review, it was too much, and we could tweak what was happening, and we actually saved him $36,000 in tax in 2015's financial year.
Yeah.
And that's a massive impact, and was able to help them grow in a short amount of time. So really happy with what happened there.
That's great. And there's a process that we do, and I'm going to make the invitation for those who want to as well, in today's webinar, called a look under the hood. And we do these look under the hoods almost most days, and I get the privilege of being CC'd in on the email that Ben sends back to a client after he's done a look under the hood. Now, what that process is about is us looking into your financial engine, typically that's Xero, your Mile file, and see if we can find any opportunities or gold, such as what we've done with Jeff and his uncle as well. And I get CC'd on the email that gives people the good news about what has been or what gold has been found. And it's little like every second day, one to Shay, one to Lucas. The great news is what Ben's subject line is for that email, and very hurriedly open it up and see what that dollar value amount is, and that's really cool. That's really rewarding work for us. So our invitation for you guys, we're about to get into the 5 ways that to know how to know if you're paying too much tax. But if you already got the inkling that you might be in that boat, then all you need to do to have a look under the hood with us, it's no obligation, there's no fees associated with that, is just email us hello@inspireca.com, and we'll be able to book that in for you. While there's no obligation and there's no cost associated with it, there is a lineup. So I encourage you, if you may be in that case and you want to have us give you a second opinion over things, then just email us hello@inspireca.com, and we'll book in some time to actually do that process. So with that in mind, Ben, let's go into those 5 ways that people can tell, or business owners who are live today can tell if they may be paying too much tax, and in so doing, let's give them a bit of guidance as to what they may like to do about it. Is that okay with you, bro?
Sounds like a great idea.
Awesome. Okay, so let's go on to our very first step.
Number 1. Right.
Cool, bro. Sorry, my internet just jumped up a bit there. So what is that first way we can tell, bro?
Yeah, so the first way you can tell if you're paying too much tax is if you're paying on average more than 30 cents in the dollar in tax. So if you're paying more than that, I believe you could be paying too much. Why? We actually have a client who's earning in excess of $1 million in profit, and they're paying under 25 cents in the dollar. Now, you might know the marginal tax rate of an individual. Once you earn over $180,000, you start giving almost half of everything you earn over that to the government.
That's
so how we can, it is. It's insane. We're one of the well-taxed countries in the world.
But what a blessing to be in business, though. We'll have the freedom to do that as business owners.
Yeah, and that's the key. That's the key. So if you can add up your average tax rate, and we can help you look into that. And if you're paying more than 30 cents in the dollar, that's one reason where I believe you'll be paying too much.
So is that a guarantee? If you are paying over 30 cents, you absolutely are, or it just might be a early indicator?
An early indicator. So there are industries which you can't, and there's scenarios which you can't avoid this legally. So what we want to do is keep within the rules, but there is certain and most circumstances where you should be paying much less than 30 cents in the dollar.
And is there such thing as a good tax rate? Like is the ultimate goal 0 cents in the dollar?
No. And if you're paying 0 cents in the dollar, that means you're not earning too much. So we do want you to be earning and paying tax, but the part is just not excessively. Pay Caesar what is due, but don't tip him. Don't pay him anymore.
I like that. I definitely like that. Caesar won't like you for that, but that's okay. I think he's lying.
No, that's it.
Cool. Okay, so that's our first way. So where might we look to be able to find out what our current tax rate is, or what we might be paying?
Yep. So it is a little bit of a complex way to calculate it, but you just add up all not the next net tax payable or refundable for the year, but the actual tax on your notice of assessment, or your company's notice of assessment, and work out as a percentage of your total profit how much tax did you pay. That's what we do stock standard as one of the things in the look under the hood. We work out what that percentage is.
Great. Awesome. Fantastic, bro. Okay, let's go to the next one, which we've got a little bit of a sneak preview of.
Yeah, that's it. So this one is, are you receiving a salary or wage? Now, just like the first one, if you're receiving a salary or wage, it doesn't mean you're automatically paying too much tax. What it is an indication that you might be. And the reason why is just like a couple of the recent look under the hoods we've done, accountants have set people up with a company and said, hey, draw your salary out as a wage. But what this doesn't give you is, you don't have a choice whether you pay superannuation or not, because even as a director of your company, you still have to pay super on your technical wages. And also you have to remit pay-as-you-go withholding each quarter, along with your employees to the ATO. So from a cash flow perspective, that's where you can have some really good wins. But also with a wage, it's a quite inflexible way of saving tax from a family, like a family group perspective.
Understood.
Usually,
actually, I remember, I won't mention his name, but there's a really cool young guy who's a friend of mine who I know from a business education group we're both involved in, and I asked him some exploratory questions, and he goes, yeah, no, I'm all good. My accountant's got me set up, and I'm getting us a wage coming through, and everything's all good. And I know that he recently did the look under the hood with you, and I think you told me yesterday that you were able to save him $3K just on the September BAS alone. So he was absolutely stoked. He was at my birthday party last Saturday night, actually, Ben. Shouted me a few drinks, and that's probably from the money you saved. So can I thank you for those vodka, lime and sodas?
No worries at all. And I think back to email subject lines, I think the email I sent to him, and this wasn't his September BAS, this was his 2015 stuff. It was, here's 5,000 reasons to smile, and we had another great outcome.
That's awesome. That's cool.
Yeah.
Very cool. Okay, bro, let's go tip number 3, how we may know if we might be paying too much in tax.
That's it. Number 3 is if you have an old school accountant.
Hey, Harry the dinosaur.
Harry or Harriet the dinosaur, that's it.
That's right.
With this one, again, there's no blanket rule that if your accountant's over 40, then they're wrong. There's definitely great accountants of all ages, but if someone's not keeping themselves up to date, not keeping their ear to the ground with your business, which unfortunately a lot of the industry doesn't do rather, then there may be an indication that they're just not looking after you or looking out for you as much as they could be.
Yeah, understood. And so, like, Inspire can't look after the entire world, but I know we're doing some work with some very exceptional accountants literally around the world to help them make bigger impact in their clients' lives. Ben, what have you seen to be the commonalities amongst the more real-time accountants? Like, what should someone be looking for out of their accountant nowadays?
And I think it's an open channel of communication. A couple of the key things that people usually get wrong, and that we identify. Hey, had you had gone and seen your accountant before you bought a vehicle or something like that, you could have saved $5,000 in GST, or you could have structured it better so it's less administration headache. Your loan could have been different, but basically, while there's a tax implication of keeping close to your accountant, there's also other cash flow benefits of making sure you're getting the right advice when you're making key business decisions. And if there's one thing, it's just keeping that open channel of communication and working with an accountant who doesn't mind the old phone call or an email, or actually gives you a call. Yeah.
And are there any other indicators? Like, one of the reasons why people don't call their accountant is because they think they're going to get charged for it. So, how is that standard across the industry? Or is that an old school indicator that you might be with one of those Harry the dinosaurs? Like, what should we be looking for?
Yeah, the older business model is to start the clock every time the accountant thinks about you or talks to you, and bills you by the hour. That means that if you do ring them up and ask them, hey, what entity should I buy a car in, that you probably would get a bill for a couple of $100 to follow that call. Now, and this is sort of with the old school model, that's the norm. With this sort of fresh breed of accountant, they're around the world. Usually their fee models are a fixed fee or upfront, that you know what you're getting yourself into before you accept. You know how much communication and touch points you have with them throughout the year. And working with us, for instance, you're able to call us and we're not going to charge you unless you're wanting some advice on a business merger or something like that. But that's obviously something we can't do over the phone. But yeah, if you rang us and said, "Hey, I'm buying a car. How do I buy it?" That's a call we won't charge you for.
Awesome. Very cool, bro. Okay, we'll get on the home run now with the last two ways we can tell, and let's wrap up our webinar for today.
Cool. So this is a massive point, that if you don't use a company or trust, but you run a business. And this is one that's very close to my heart. I love business structures and working with clients to map out the best thing and most suitable thing for them. But if you don't use a company or trust, it only leaves the option of either you're a sole trader or you're a partnership. Now, both of those straight off the bat have massive risk, like a massive risk for your trading activities. You could get sued and bring in your family house and your family assets to pay for that lawsuit. But also, using a company or trust gives you flexibility of usually flexibility of who pays the tax from your business profits. So that could be your husband or your wife. But if you're a sole trader, you pay the tax on the lot. You don't have a choice of spreading it out.
Yeah, understood.
So this one is a massive key.
And you look out for that, obviously, in a look under the hood in terms of what structures that they have in place. So that's great. And I think one of the people who's live on today's webinar will be seeing this afternoon to discuss exactly this topic. So that's really cool. Awesome. So final one then, Ben, that we should be looking out for. There she is.
Yes. Hi, Sharon. So you don't do proactive tax planning. This one. When we're meeting with prospects, we actually walk through how we work with them throughout the financial year. Now, what tax planning is in April to June of each financial year, before it gets to 30 June and the financial year is closed off, we sit down with them, estimate the income, the expenses, and also the profit, and even give them an estimate of the tax they'll pay on that profit. And then we strategize what can they do before the financial year finishes to save tax. So things like just as simple as paying superannuation before 30 June versus after. Things things like prepaying expenses and other ways that you can easily save tax.
Fantastic.
And we actually...
I'm just still amazed that this isn't the norm, that business owners aren't typically meeting with their accountants at key points throughout the year to plan, not just for tax minimization, but also for profit, for growth, and for a beautiful future with their families. So but that's a shame, but that's why we're here to exist. So let's wrap up then, Ben. The next slide just reminds us, if you feel that you may have been in the category of maybe paying too much tax, and you'd like Ben to have a look under the hood, to give you a second opinion on what opportunities we might be able to find. Maybe, just maybe, you'll be one of the ones who receive those emails with 5,000 or 35,000 or 55,000 reasons to smile today, and that would make us happy as well. So again, there is no cost and there is no obligation. What will happen is we'll ask to have a look into your financial engine and to send us a little bit of info so we can get some context on the bigger picture. However, it will give us an opportunity to find some gold for you and give you a recommendation on how we think you might be able to achieve your family goals by using your small business. So hello@inspireca.com. There obviously is quite a few people who kick down our doors to be able to do that process. So just have some patience, please, with us when we do receive that email. But we solely exist to help young families in business. So we are absolutely here to help. So with that in mind, Ben, just the next slide is a thank you to everybody and also an introduction to next week's webinar. Webinars are great for us because they're our way to be able to impact more people, more businesses, more families in one go. So I encourage you to think about what you're doing next Friday, the 4th at 10 a.m. If you would like to learn 5 ways about how to boost your pre-Christmas cash flow, then I encourage you to type in bit.ly/5xmas, which is short for Christmas, 5xmas boosters, and that will give you the registration for our webinar of 20 minutes that we'll be bringing to you next Friday morning. So thank you very much for being in attendance. I hope you enjoyed what you learned today. And if you have any feedback or questions for us, or you would like to book in a look under the hood, I suggest you please send us an email, hello@inspireca.com. We read all the emails you send through, and we also respond and thank you for them as well. So thanks for your time, and enjoy the rest of this beautiful Friday wherever you are in Brisbane. See you guys. Thanks, Ben.
Cheers.
Cool. See you, Sharon. Yes, we will see you this afternoon. Thanks, Chris. It was well done. Appreciate your support. We'll see you here shortly as well.